Okay. Hi everyone. Good evening. Uh, Good evening. Everyone, can you hear me clearly? Mr. Linga, everyone. Tanu, Vaishnavi, Kuldeep, Navneet. Okay. So yeah. Good evening, everyone. Great. So today we are having the revision session of our income tax, right? Intermediate income tax. So I think you already revision sessions are going on and you've already covered some chapters. Already three chapters are covered, right? So this is the fourth chapter that we are going through. My screen is visible to everyone, right? Please confirm. So, okay. So, okay, today, you must have already seen the schedule. So we'll do it. We have three chapters today. We have clubbing, we have set off, and then we will take some part of the deductions, right? So these are the three topics that we will take up today, and deductions will surely take up in the next session as well. So we'll have this session today. So the way we'll proceed with the session is we have some good questions which you have already which the PDF file has already been shared with you everyone. So those questions will be discussing in the classes, right? If you have any queries, you can ask, right? And this will have a quick recap of all these chapters. Navneet, okay, Navneet, are you not able to you're like able to log in through the Zoom portal, right? You're logged in here. So you can type in the queries here, okay? Maybe this admin issue you can resolve further and later on. As of now, you are logged into the class and you can attend the class, okay? And if you have any queries, you can type in the chat box, right? I have access to chat bot. Okay, so let's have a quick recap. So this is chapter number 4. Chapter number 4 is about no problem, Navneet. You're not. You are. You can type the queries here, and you can type the queries here, and I'll take your queries. Okay, whatever it is. For now, let's start it. So, chapter number 4 is the clubbing of income. So, if you remember, in fact, I covered this topic in this batch, right? It was in January, right? So, a very good chart has been given in the study material, and you can just have a quick look. Okay, we'll just have a quick look at the topics, and then we'll proceed. Okay. We had section 60 when you're transferring the income without transfer of the asset, then clubbing would be there. If you transfer the asset but it is a revocable transfer, then also clubbing is there. There were certain exceptions, like if it is revocable but during the lifetime of the beneficiary, not revocable during the lifetime, after the lifetime it reverts back, right? So accordingly, then we discuss about the cases of. Will not go into so much detail. So spouse's income. So spouse's income, substantial interest we had seen, remuneration that may be clubbed, right? So if you income arising from spouse from the transferred asset without adequate consideration, right, and not in connection with the agreement to live apart, right? And same way, income arising from any AOP or assets transferred without adequate consideration. So in that scenario, spouse's income will be clubbed. Now then it was about minor income. For minor income, there is an income like, okay, the minor income is clubbed. Only these income are clubbed, or all minor income is clubbed. All the incomes of the minor are clubbed, right? We have seen. Then there was a case of minor married daughter as well. We had seen separately. So even see, if it is a minor person, then the income from house property, we apply the provisions of the deemed owner. But in case of minor married daughter, we don't apply. And there were certain exceptions if it is from the skill of the minor or then child suffering from the ATU disability. Then there were provisions for the son's wife clubbing, right? Son's wife clubbing. So this was the major gist of this chapter. So you have already have these charts and you already have this recapitulate summary in the study material, right? So I hope you would have already gone through since it was in the schedule, right? So this was basic about the clubbing. Now another chapter is chapter number 5, aggregation of income, set off and carry forward. Again, this also we covered. In fact, I covered this in this batch, right? So this topic again you can see set off and carry forward. Firstly, you will do intra-head adjustment or inter-head adjustment. Everyone. Firstly, you will do intra-head or inter-head. Firstly, you will do inter-head adjustment or intra-head adjustment. Intra-head adjustment. Then you will do the inter-head adjustment, right? Everyone remembers? So, okay. So firstly, we do inter source, intra head, right? There are certain exceptions. Loss from speculative business can only be set off from the speculative. Then loss from owning or maintaining of race horses. It is about the race horses, not about any other animal, right? Just keep in mind. Long-term capital loss can only be set off against the long-term capital loss. Then inter-head adjustment. The PGBP loss cannot be set off against the salaries, right? Because people try to do planning, that's why the government disallowed it. Then capital gains cannot be set, loss from capital gains cannot be set off against any other head, right? Then speculation loss from owning maintaining of resources cannot be set off against any other head, right? Then loss from house property cannot be set against any other head of income. But again, the new scheme and old scheme is there. By default, we follow 115 BAC, right? We follow the new scheme by default. If the question says nothing, we'll follow the default scheme only, right? If you opt out of the default scheme, then you apply the old scheme, right? Then next thing was carry forward and set off. Unabsorbed business losses 8 years. Speculation losses 4 years. Then again, capital losses long term 8 years. Short term capital losses 8 years. Unabsorbed loss from activity of owning maintaining resources again 4 years. Right. Then following brought forward loss is not allowed to be set off. Okay, new scheme. Brought forward loss from self-occupied property not allowed. Brought forward loss of 35 AD business not allowed. Brought forward loss of account of deduction of 35(1) not allowed. And then unabsorbed depreciation attributable to additional depreciation. Clear? Then next, inter-source set off under the same heads of income. Right. Okay, this was under the new scheme, 115 BAC, default tax regime, and this was under the, sorry, just give me one second. Yeah, this is under the normal provision. Yeah, I'll increase. Sure. Okay, right? Okay, sure. So now, okay, now this is under the normal provisions. Normal provisions, again, you can quickly have a look. Mostly it's the house property, right? House property, you can set off up to 2 lakhs, right? So that was one thing. And most of the things are similar. You can just have a quick look, right? So this was about the set off. So first you do the inter source, then you interhead, and then yeah, that's how we do it. Okay. One or two important things. Okay, okay. Now, quick question to everyone, since it is a revision class. Even if we haven't filed the return on time, which losses we can carry forward? If we haven't filed the return on time, which losses we can carry forward? There are two losses which we can carry forward even if we haven't filed the return on time. Unabsorbed depreciation, correct, Navneet? First one. Second one. Second, house property, and house property in the new scheme is not allowed. That is only in the old scheme, right? So these are the two things. So you can just have a quick look at the summary. So this is about the set off. Then next chapter is on the deductions, right? Deductions. So if you come to the deductions again, it is a big chapter, right? I will say one thing. Let's go to the summary that we have here. Yeah. Okay. So we have very famous section coming in ATC, right? In new scheme, only limited deductions are allowed. ATC, again, LIC contribution to PPF subject to maximum of 150K, 1,50,000, right? Then it is not allowed if you are opting out of the new regime, right? Then ATCCC, it is for pension, right? Again, ATC plus CCC plus CCD is total 150, right? Then contribution to pension scheme, right? Then in case of pension scheme, the employee's contribution, we see it is restricted to 10% of the salary and 20% of the salary, right? Plus additional 50K is also allowed on account of the contribution, right? Then next thing was employer's contribution. Employer contribution in the new scheme is 14%. 14% under the default tax regime, right? The 10% is 14%, right? Next, ATCCH. I hope it should be fine now, right? Okay, just let me know if I need to zoom in more, right? I think it should be fine now. It is from your study material only, okay? So 80 CCH is for the Agniveer Corpus Fund, right? Agniveer Corpus Fund, whatever amount you deposit. Then, okay, one question was there. I think it is in the tier one. Okay, can you just notice it? 80 CCD, it is in the tier one pension account. Tier one account, tier two accounts are not considered, right? Next is 80 CCH Agniveer Corpus Fund. And ATD, very, very important section. ATC is important. ATD is also very important. Many a times you receive questions on it, right? You receive your case-based scenarios. In most of the questions, ATD is there, right? So medical insurance premium for you maximum 25K, right? If you are individual, if one is senior citizen, then it is 50K, right? For yourself or for your spouse or for your children, or in case of HF, the family member, right? It is allowed 25K. Now for the parents, again 25K is allowed, 20 or 50K in case either or both of them are the senior citizens. Senior citizens. Next. Then preventive medical health checkup is allowed again 5K up to 5K, but that is included within the limit of 25K, right? Next is 80DD, maintenance including medical treatment of a dependent disabled, flat deduction of 75K, right? If 80% or more disability, then 125K, right? I'm not, you can just quickly read it, okay? I'm just giving a very, very high level glimpse, okay? Ideally, you would have already studied for the revision, right? 80DDB, 80DDB is, okay, then I'll cover it separately, okay? I just noted down your query. Let me just do that. Tier 1 and Tier 2 ATCCD, I'll explain later on, okay? I'm not able to paste here. Give me 1 second. No problem. I noted down. There is one question as well. I think we can do that, right? So 80DDB, 80DDB is for the medical treatment of specific disease or ailments. 40K, then 100K payment is for the medical treatment of the senior citizen. 80E again, in many questions you get it. Higher education loan, right? Higher education loan you take it, then you get the deduction of the interest paid for the interest paid. 80E interest on loan borrowed from any financial institution for the acquisition of residential house property, deduction up to 50K, but loan should be sanctioned during previous year 16-17. See, these are certain deductions you will find. If the person has taken loan in that year, then you get the deduction in this year because we are studying the relevant year. Which is the relevant assessment year for us? What is the relevant assessment year for us, for your exams, for the May 26 exams? Everyone, what is the assessment year? Assessment year I'm asking, Abhimanyu, it's not 25-26, it is 26-27. For us, the relevant assessment year is 26-27, right? Okay. Then 80 EEA, again, deduction in respect of interest loan taken from FI for acquisition of residential house property. Again, this was from the loan should be sanctioned from 19 to 2022, stamp duty value less than 45. Deduction of interest up to 150K. Then it was in respect of loan from purchase of electric vehicle. Again, very, very important. 80 EEB. This also you can get it. If the loan was sanctioned in 19 to 23, right? Then then in 150K is allowed. 150K is allowed. 80G. 80G, you need to see the scenarios. 100% deduction in certain funds. Then 50% Prime Minister Road Relief Fund without qualifying limit. Then it is 100% subject to limit for the promotion of family planning and all. Then 50% subject to the limit, right? Now you calculate the limit, right? Deduction under section 8, except under section 80G, you see. Then gross income, okay, you take the gross income without section 80G deduction, reduce all other deduction, then reduce this short-term capital gains 111A, long-term capital gain 112 and 112A. You take the you calculate the adjusted total income, you take the 10% of it or the actual donation, whichever it is, which is subject to the qualifying limit, you take it, then that will be the maximum permissible deduction, right? Then you can take the 50% of it, right? Now if it is more than 2K, then it should not be in cash, right? It should not be in cash. 80 GG is rent for paid for a residential accommodation. Residential accommodation, you pay for the rent, you get a deduction. 25% of total income, rent paid minus 10% of total income, or 5,000 per month, right? Least of the following. 80 GGA is for scientific research for rural development, actual donation, whatever you give. 80 GGB is for the political parties when the Indian company gives, or 80 GGC if any person other than the local authority or juridical person gives, right? If an individual gives, 80 GGB will be applicable or 80 GGC will be applicable? Everyone. If an individual gives, which section will be applicable? Students, come on quickly. 80 GGC would be applicable. Are you able to follow me till now? You're following me till now, right? I hope this quick glimpse should be useful, right? Now, again, deduction as per section 80, okay, 80 JJAA, 80 JJAA, again important, 30% of the employee cost, right? Deduction is allowed for 3 assessment year, including assessment year relevant to previous year in which employment is provided. 30% of the employment cost. 80 QQB is for the royalty income derived, or the 3 lakh, whichever is lower. RRB is for the patents, right? TTA. See, again, this is an important deduction, because let's suppose you get a question, you have to calculate the total income. Because for let's suppose for the medical insurance premium, the question will give, okay, the person has paid this much medical insurance premium and all those things. So you will remember those adjustments. But 80 TTA, they will not say you anything. You have to directly give, because there is an interest income from the saving account. So you need to take care of it, because otherwise your answer would be wrong. The question will not say any specific line for it. It is automatic, right? You need to take care of it. And if it is a resident or senior citizen, then it is 50K. 50K. Then 80U is for the disability, 75K, 125K disability is 80% or more. Then 10AA. 10AA is for the SEZ, right? Export turnover, right? So first year 100%, second year 50%. Then sorry, first 5 years 100%, next 5 years 50%, next and further 5 years is and provided you subject to the transfer of the SEZ investment account reserve. When you calculate the profits of the unit in the SEZ into export turnover divided by total turnover. Now one catch here where you can do a mistake. Profit or unit of SEZ we take the export turnover of the unit SEZ, we take the total turnover of the unit SEZ. Everything is of the SEZ here. Getting it? Let's suppose if the question gives you the total turnover of the company, that will not be relevant here. You need to take the SEZ turnover only. SEZ unit turnover only. Clear? Okay, next. Yeah, okay. So this is about the deduction. See, it is not a very big topic, but if you will just see it and you will try to remember it, you have seen a glimpse of it, then you just quickly read it and it will be easy, right? Okay, so this was about the, now let's move on to the questions we have. I hope everyone has this file as well, right? This file is uploaded, okay? But anyways, even if you haven't looked at it, we'll see it in the class, no problem. So there are certain questions that we have identified that we'll be practicing today for this revision session, so we can have a better revision, right? This is the question from your RTP, okay? Please do not open the RTP if you have, do not see the answers, okay? So this question is from your RTP, which RTP for the May 26 exams. Let's see this question. So there are 5 MCQs here, right? Okay, whenever before approaching any question, I'll say one thing. Always see the scheme. Mr. Roshan wants to pay tax under the default tax regime. So we need to follow the 115 BSc new regime, right? We need to follow the new regime. Okay, RTP question 1. Mr. Roshan, aged 45 years, is employed as a finance manager in XYZ Limited. Mr. Roshan is 45 years, not a senior citizen, because if senior citizen, the different limits will apply, different provisions apply. So you need to take care. What is the age? Then during the financial year 25-26, he receives the following. Basic salary, is that taxable? Basic salary, is that taxable? Everyone, I want your quick answers, okay? Everyone. I want your participation so that we can make it effective, right? How much will be the taxable amount? Okay, how much will be the, let's see the, understand the question first, then we'll quickly go to the options, right? Then we'll see the question. Let's see the paragraph first. Basic salary 60K per month. So it will be 60K into 12, right? So it will be 720K. Next, DA 12K per month, 50% is forming part of the retirement benefits. Okay, DA, how much? It is 12K into 12, 144K. Next is employer contribution to PF. Okay, now this is ER means employer. Employer contribution to PF. How much it is? Let's do a calculation. 15% of the basic salary. How much is the basic salary? 720 into 15%. It is 108K. Now, how much is exempt? How much of the employer contribution is exempt? Can you tell me how much is the, how much of the employer contribution is exempt and how much is taxable? Tanu says 12%. 12% is exempt. 12% of what? Okay, students, you are typing direct messages. Okay, can you type it to everyone so that everyone can look at your answers? Okay, that will be quite better. Most of your, almost everyone is typing the direct messages. If you can type it to everyone, it would be better, I think. Uh, okay, it will be 12%, right? So 12% of what? So 12% is exempt. 12% of, they say, basic salary plus 50% is considered for the retirements, right? 50% is considered for the retirement. So this is the amount. You take the 12% of it. You take the 12% of it. So ultimately, how much? 12,960 is taxable. 12,960 is taxable, right? Then next. Next is, so this is my income. Do I have to do anything else for the income under the head salary? For the income under the head salary, I have to do anything else, or I'm done? Everyone, quickly. Okay. Mr. Linga says it's done. I hope I'm not done. Anything else I have to consider? Standard deduction. How much in the new scheme? How much? A default regime? How much standard deduction? 75K. 75K. So how much is my income under the head salary? It will be 801,960. 801,960. Clear? Everyone, are we good till here? Can I move on? It was pretty simple, right? Next, he owns a house property which is let out during previous year 25-26. He has taken a loan for acquisition of this house and paid interest of 2.20 lakhs. Now it is a let out property. He has taken a loan for this house and paid interest of 2.20 lakhs. Now let's see the figures. Municipal value 180K. Municipal value is 180K. What do we take? Yes, total interest will be allowed as deduction because it is a let out property. Let out property. Now let's calculate income under the head salary. Sorry, income under the head house property. I mean. See, with these MCQs, I'll say one thing. In fact, we'll discuss some strategy as well. With these MCQs, the thing is, you don't have to present the entire answer. You can do only your rough calculations, whichever way you feel it's fine, right? But it should be clear, right? So municipal value is 180K per month, per annum. Fair rent or standard rent. We need to take the higher of the fair rent or standard rent. Sorry, we need to take the lower of the fair rent or the standard rent. How much? 195 or 180, whichever is lower. 180K, 180K, right? So we need to take the lower is 180K. Then for this 180K or the 170K, we need to take the higher of the two. We need to take the higher of the two. How much? It will be 180K, 180K. So my rent would be My rent would be 180k, right? 180k. Now I take it. My rent would be 180k. Then next, municipal tax is paid by tenant. Municipal tax is paid by tenant. Can I deduct this? Can I deduct this? Abhimanyu says yes. Tanu says no. Give me the reason for no, or give me the reason for yes. Yes, you will not deduct it. It is paid by the tenant. It is, you haven't paid it, so how can you deduct it? It is paid by the tenant, so you cannot deduct it, right? There will be no deduction for the taxes. Then repair expenses. Can I deduct the repair expenses? Can I deduct repair expenses? No, there will be a standard deduction for 30%. 30%, right? So I can reduce standard deduction. Okay, I'm just taking directly 30% of it. Then there is an interest deduction. How much? How much was the interest? 2.5, 2.2 lakhs, right? 2.2 lakhs. How much it comes? 94. Is this loss allowed? Is this loss allowed? Everyone, quickly. Is this loss allowed? Tanu says yes. Abhimanyu says yes. Which scheme are we following? Which scheme are we following? We are following the default tax regime. In the default tax regime, is the loss from house property allowed? You know, that is for one, up to 2 lakh is for the is for, again, for the old scheme. In new scheme, it is not allowed. In new scheme, it is not allowed. So what will be my final income from house property? It will be zero. New scheme not allowed. Okay. In new scheme, this is not allowed. See, Tanu, if it would be the set off within the same head, is there any other house property income? There is no. From the other heads, this loss will not be allowed. From the other heads, this loss will not be allowed. Set off within the house property head is allowed, but from the other heads, it is not allowed. Okay. Next. Other transactions include during the financial year, household LED and refrigerator purchased in 2017 for 56k was sold in for 15k. They were having the household LED and refrigerator. Household LED and refrigerator they have purchased for 56k and they sold for 15k. There is a loss on the sale of refrigerator. Is that allowed? Is this loss allowed or the sale of refrigerator? Quickly, everyone. No, because it is item of personal effect. Personal effect, not allowed. Next, advance of 400k was advance of 4 lakh was received from Mr. Vanraj on 1st May 2025 against sale of urban agricultural land for 11 lakh. They agreed to sell the land for 11 lakh, 4 lakh advance was received, which was used by his father for agricultural purposes. Even if used for agricultural purposes, it's an urban agricultural land. So is it taxable or non-taxable? Okay, and this advance was forfeited. This advance was forfeited. So my income, I have received advance of 4 lakh, although the sale price was 11 lakh. The advance I have forfeited. How much is my income? How much is my income? 4 lakh or 11 lakh or zero? 4 lakh or 11 lakh or zero? It would be 4 lakh. It would be 4 lakh. Income from other sources, 4 lakhs. Next. The same land was subsequently sold to Mr. Jain on 1st December 2025 for 10 lakh 50,000. The land was purchased on 20th January 2006. Long-term capital gain. For 1,50,000, Mr. Roshan has purchased. Okay. Now we are calculating the cap gain, CG. For the capital gains, let's see. It says I've sold it for 10,50,000. Right, this is my sale price. Now then I purchased it for 1,50,000. Now I'll calculate the index cost. 1,50,000. Now rural agriculture. Sorry, yeah. Then what is my? It was purchased in 2006. So my that time cost inflation index was 117 divided by 117 into how much is the cost of inflation index now? 376. 376. So this is my index cost. How much is my gain? 567,949. Then it says something. Mr. Roshan purchased new rural agricultural land on 10th of March for 950. With section it will be allowed. Will this gain of 5,67,000 will be taxable or non-taxable? Or there will be some exemption that will be allowed? Capital gains. Capital gains. Is there a section for the rural agricultural land purchase? Sold one land, purchased another land. It is not the bonds. It is not the bonds. For immovable property, Abhimanyu, these are both the options, right? For immovable property sold after 23rd July 2024, right? For the individuals and HUF, you have the option, right? You can take in both the scenarios, whichever it benefits, right? Okay, sorry, but that is for the, yeah, that will be for the calculation of tax. That will be, but okay, maybe let's do one thing here. 1,50,000. Let's directly reduce 1 lakh because for the calculation, yeah, you are correct. For the calculation, it would be directly 1,50,000 only, right? Then at the time of taxation, we consider that. So it is 9 lakhs. Yeah, only for the purpose of tax we consider, not for the purpose of income. You're correct, right? So, but no problem. So whichever way you go with, right? Only for the purpose of tax you do the indexation, but not for the purpose of income, right? So they purchase. Now this will be section. One student has answered. Someone answered 54B. Just now someone had answered. So it would be section 54B that will be allowed. 54B that will be allowed, right? So they purchase for 950. So yeah, it's already less than that 900K. So 900K will be allowed. How much will be taxable? Taxable would be zero. Capital gain would be zero. Clear? Next. Interest credited in the PPF account. PPF interest, taxable or non-taxable? PPF interest, section 1011, section 10 clause 11, right? PPF interest is non-taxable. This is non-taxable. The next is 75K towards the life insurance cover. Now what is the limit? Will 80C apply or 80D will apply? 80C will apply. This is life insurance, not medical insurance. So 75K for the life insurance and 100K for the PPF. Total 175K. How much maximum will be allowed? How much maximum will be allowed? How much maximum deduction would be allowed? What is the limit for 80C? Okay. I mean, not 50K, it is 1,50,000. But yeah, that's fine. See, here the premium is not given, right, Navneet? So here the 20, 10, 15% of the premium is not given, right? But think, if the premium is not, if the total, sorry, sum assured is not given, if the sum assured is not given, it's fine. You assume that. But tell me, the 80C limit is 1,50,000 in total. But will there be any deduction? Will any deduction will be allowed or not? We are following the default tax regime. We are following the default tax regime. No deduction in default regime. Navneet, I'm not sure of these things. Okay, maybe you have anyone you can connect in the tech team or something like that. sorry, I have done wrongly. Yeah, so the income from salary is 801. Then it is house property would be 0, IFOS would be 400k, then capital gain is 0. Yeah, that's it. So it would be 12 lakh 1960. Maniji, can you just check the query of Mr. Navneet? So he's facing some issue. Okay, so it would be 12,01,960. Let's see. Now we have done the entire question, right? Let's see all the MCQs now. What would be the amount chargeable under the head salaries? Very easy. 801,960. Option B would be the answer. 801,960. 801,960. Next, what amount of capital gains? How much capital gains? Nutshell, 0, nil. C would be the answer. C would be the answer. The answer here would be, sorry, it would be B here, C here, right? Then next. Next is what would be the total income? Total income we have seen 12,01,960. So it will be 12,01,960, right? Option number A should be the answer. Option number A should be the answer. Give me 1 second. Sorry. Yes. Okay. Option number total income 12,01,960, right? Option A is the answer. Next, what is the tax liability for Mr. Roshan? Can you tell me quickly? This is the MCQ. We can do it directly. What is the tax liability in the new scheme? Everyone quickly. 0 to 4 lakhs. 0. Then the next 4 lakhs, it would be 5%. The next 4 lakhs, it would be 10%. Then the balance amount 1960, it would be 15%. So it would be 4 lakh into 5%, then 4 lakh into 10%, and then right. Clear? Now you will add cess and all. Is that answer correct or there is something else? Is this answer correct or there would be something else? Relief? No, no, surcharge is not applicable. Navneet, how can surcharge be applicable below 50 lakhs, right? There is rebate. How much income has crossed 12 lakhs? How much income has crossed 12 lakhs? It is only 1960. So minus 12 lakhs. It is only 1960. You now what will be the, so this is 60 or 1960. So 1960 will be my tax liability, nutshell. You can even do a shortcut. You can, because you know only 1960 has increased above 12 lakhs, so you even don't need to calculate it. This is an MCQ, right? So you can directly calculate this plus 4% because health and education says you need to add. So this will come 2038. 2038. 2038. So rounded off, it would be 2040. It would be 2040. Okay. Visual. What do you want me? What is the query? So actually these classes are in English. If you have any specific query, I can explain you in Hindi as well. Okay. Question number 3 and 4. Okay. So question number 3 says, okay, total income of Roshan. Very easy. We have seen all the concepts, right? We have calculated here till here. Then question number 4 is about the tax liability. Okay. Tax liability. This is the formula we have, right? This is the formula we have for tax liability. Slab rates. Now, in the as per slab rate, it is coming this, but there is a concept of relief as well. Relief as well, margin relief, rebate and marginal relief. So income has crossed 12 lakhs because till 12 lakhs the rebate is there, right? So because this year the rebate has increased. Earlier it was still 7 lakhs. Now it is 12 lakhs, right? So the income has crossed only 1960. So 1960 will be the tax liability. You can get a relief, or either way you can say you will get a relief of how much? You will get a relief of how much? This minus this. You will get a relief of this much. And 1960 will be liability. You add the 4%. You add the 4% education cess, sorry, health and education cess, and it will be 20. That if you round it off, it will be 2040. 2040. Is that clear, everyone? Are you with me till here? Okay. Quickly. Next. What is the tax liability if it opts out of the default tax regime? Opts out of the default tax regime. It means now if they follow the old regime, can you tell me the tax liability? Okay. Quickly. Can I apply a shortcut here because it is an MCQ? Can I apply a shortcut here? What is my income in the new regime? My income is this much. My income is this much. Can you tell me which adjustment I should make? This is my income under new regime. What adjustment I should make? Let's try to apply some shortcut. It is an MCQ in order to save some time, because ultimately in your exams you need to save time. So there will be deduction under section 80C. How much maximum? 175 or 150? So there will be 1,50,000. I'm not doing in the proper format. It is an MCQ, right? 150K. What else? What else will change? Everyone, quickly apply your mind. House property loss. There was a loss of how much? Inter-head set off is allowed. Now house property loss we can set off under the head salary as well and other heads as well. So there was a loss of 94K. It is up to 200K, up to 2 lakh. It is allowed. So I'll just directly take the loss of 94K. Then next, salary deduction. What is the adjustment for the salary deduction? Can you tell me quickly? Salary standard deduction. Quickly, everyone, what should be the adjustment for salary deduction here? We have taken 75K deduction, but in the old regime, only 25K is allowed. So I will add 25K. I will add balance 25K here. So total, how much is my income? 982. 982. Now quickly calculate the tax liability for the old regime. What are the slab rates? 0 to 2.5 lakhs. The next 2.5 lakhs. The next okay, 0 to 2.5 lakh is 0. Then it's 5%. Then it's 20%. Next 5 lakh. But my income has not crossed, so I will do minus 5 lakh on this. So it will be 0. Then it would be 12,500. Then it would be this much. The total would be 109,092. Anything else? You need to add the cess, health and education cess. Ultimately, it will be 113,456. 113,456. So you just round it off. 113,460. The answer would be A. I hope it's clear. Everyone, any doubts? in this question? This was a good question to practice. Any doubts? Okay. So moving on to the next. Now, next question is again from the RTP of May 2026. So this is, yeah, Tanu, what is the doubt? You can quickly type in. Okay. Now this question, in the meantime, I'm starting up. RTP question number 8. Why we take 9? Okay, Tanu, you know the concept of relief in case of rebate? Okay, let me give you a quick logic, Tanu. Let's suppose your income is 12 lakhs. Let you suppose your income is 12 lakhs. What will be your tax liability in the new regime? What will be your tax liability up to 12 lakh income? Tanu, quickly. Nil. Because whatever tax you will calculate, you will get a relief. You will get a rebate, right? Nil. Now, now the taxpayer says, okay, my income has increased only by 1960. But how much tax you are charging me? You are charging me 60,000. You are charging me 60,000. Getting it? So that's why they say, okay, we will allow you a relief because your income has crossed 12 lakhs, but it is increased by 1960. So up to the amount of income maximum you pay tax. So you have calculated the tax here. Now up to this income 1960 you pay the tax. You will calculate the relief, the balance. Now you add the cess here, then ultimately that will be a liability. That will be a liability. Is that clear now, Tanu? Now this relief in case of rebate, see two things. The concept of relief, the concept of margin relief was in case of surcharge. When is the surcharge applicable? Quickly. Surcharge, everyone. What are the rate for surcharge? Let's have a quick revision. Although that should come in your last chapter, right? That revision class is yet to be there. More than 50 lakhs, 50 lakhs to 1 CR. How much? 10%. 1 CR to 2 CR. 1 CR to 2 CR. 15%. Then 2 to 5, 25%. Then above 5, 37. That is in the old scheme, right? But in the new one, right? So above, in fact, 2 to 5, there will be maximum 25%, right? 37 is not there. 37 is not there. And in case of, one more thing, in case of short-term capital gains and all those special types of income, the maximum surcharge rate is how much? Maximum surcharge rate is 15%. Everyone clear till here? Now the next thing, in case of surcharge, the concept of margin relief was always there. Was always there. Now, do you get the now in case of rebate, 87A rebate, do you get the marginal relief in old scheme? In old scheme, do you get the marginal relief? The answer is no. Do you get in the new scheme? Do you get in the new scheme? The answer is yes. So the government wants to promote the new scheme. That's why they've given the benefit in the new scheme, right? Clear? Everyone able to follow me till here? Okay, let's move on. Let's move on to the next question. Okay, RTP question number 8. Mr. Whipple, yeah, Navneet, ideally the old scheme will retire in the future, right? Ideally, that is the idea. Because the government won't whatever you want directly pay the tax. We are reducing the rate of taxation, that's fine. In fact, people are getting more benefit. In fact, if I take my personal case as well, I'm getting more benefit in the new scheme, right? The government has reduced the rates of taxation, right? And they've given additional benefits. You see the standard deduction, they haven't increased in the old scheme 50K, but in the new scheme it is 75K, right? So they say we are just moving we are shifting towards a different scenario, right? Different era. Okay, next thing. It is Mr. Whipple. Okay, what do we need to calculate? Let's see the question first. Gross total income of Mr. Whipple as per optional tax regime. We need to follow the old regime now. We need to follow the old regime now. Optional tax regime. Now they want to calculate the GTI. GTI. Okay, let's see. Mr. Vipul furnished the following details for previous year 25-26. Loss from house property computed. Loss from house property. Can I quickly write the 5 heads of income? That will make it easy. House property, PGBP, cap gain, then its salary, and then other sources. Now let's see it one by one. Loss from house property computed 260K. There is a loss from house property. Let's keep it, let's write it here. Loss 260. Then income from business in India 8,60,000. Business income. Okay, how much? 8,60,000. You can see, we will upload the detailed answers as well. Okay, we will upload the detailed answers as well. So you can see the presentation and all that in that. In fact, for the presentation, I'll give you some quick. At the end, I'll tell you how to present and something about the presentations and all. Okay. So the way I used to present it. Okay, maybe I'll just share one of the experiences and I'll tell you the presentation part. Income from house business in India. Yeah, loss from salary computed means already 30% and everything is given, right? That is computed. Now, short-term capital gain on the sale of equity shares listed, STD paid with section, section number, with section for short-term capital gains. Quickly, everyone. 111A. What is the tax rate? What is the tax rate in 111A? The tax rate in 111A would be 20%, not 12.5. Abhimanyu, it's short-term. It's 20%, not 30. Who said 30? It's 20%. How much? 199,800. 199,800. Next. Income from card game, gross. Income from card game, gross. This income is again taxable. One lakh 2,500. Right? Special income, right? Then loss from betting. Is this loss allowed? Not allowed. Oh, where is the gross return? Okay, card game. No. Do we deduct 30%? Answer is no. There is no expenses allowed against it, right? We will not deduct anything 30% Navneet. The betting, loss from betting, casual losses are not allowed. They're not allowed. This is not allowed. Expense of lottery income. Lottery income, is the expenses allowed for the lottery income? See, let's suppose I ask you, I purchased a lottery for 5,000 rupees and I've got a lottery, I've won the lottery and I've got 1 lakh. How much is taxable? I purchased the ticket for 5,000 rupees. I won the lottery. How I've received 1 lakh. 1 lakh will be taxable. The expenses will not be allowed. Okay, next thing. Normally, I receive the entire amount or it is net of TDS which I receive in the bank account. It is the net of TDS which I receive. But for the TDS, I will get the benefit. The entire amount will be taxable, right? So here it says this is not allowed. Income from lottery 38,500 net of TDS. This is what I have received in the bank account net of TDS. How much should be the gross should be taxable? Lottery income, how much should be taxable? How much should be taxable lottery income? How much? Compute the amount quickly. Abhimanyu, quickly. Tell me the amount. It is 38,500 net of TDS. What is the rate? What is the rate? What is the rate of TDS? 30%. So I tell this amount represents 70% portion. I divided by 70%. It will come 55K. It will come 55K. Clear? Next. Next is loss from activity of owning, maintaining camel for races. Is this loss allowed? 20,000 loss. Is this loss allowed? Why? But loss from the races are not allowed, right? Many are with me, right? Vaishnavi, Tanu, it is not allowed. See, in fact, during the revision as well today, in the starting of the session, I said owning maintaining of race horses is not allowed. That is allowed from that activity itself. But it is a camels for race. It is a business, separate business, not race horses. So this loss will be allowed. This is like my business. This is another loss. 20K. This 20K, right? This is for race camels. Clear? Next. Income from activity of owning, maintaining race horses 97,800. This would be taxable. Race horses 97,800. Clear? Long-term capital gain on the sale of land. Long-term capital gains, capital gain income. At which rate it will be taxable? 25K. Yeah, it is taxable. Urban, see, it would be land, it can be any land. It is taxable, right? They have not given you information why you take the exemption, right? 12.5%. Income of minor daughter Ria from script writing for television series. Will the clubbing apply in the hands of Mr. Whipple? This is from the talent. This is from the talent. No clubbing. No clubbing. Income or interest income of minor son who suffer from disability in the specified disease. Minor always clubbing is there. So 2,50,000 will be clubbed. 2,50,000 would be clubbed, right? So I will club it under other sources, right? Everyone, are you with me? This interest income of minor son will also be clubbed 2,50,000, right? Clear? Okay, Mr. Linga says clear. Gayatri says clear. Yes. Is there an exception? Okay, Abhimanyu says it is to be included in the income, but deduction under ATU is also allowed. Abhimanyu, we are computing the return of the child or for the parent? We are computing the income of the parent or for the child? We are computing the income of Vipul or for the child? It is of the parent, right? Now the clubbing provisions we need to see. Can you see the clubbing provisions again? Chapter number 4. Please do remember. Can you see? We have seen this exception. Manual work, no clubbing. If the child is suffering from disability, no clubbing. No clubbing. Navneet, the concept is wrong. There are two exceptions, not one exception. ATU disease, no clubbing. So there will be no clubbing in this case. Right? Next, loss from textile business pertaining to assessment year 14, 15, 7K. Okay. This loss will be allowed. This loss will be allowed to be set off PGBP income. I have good amount of income in PGBP head. So this loss of textile business pertaining to assessment year 14, 15, I can set it off. Can I set it off? That is from the disability. See, you're okay. You're on this point. Interest income of minor son who suffers from disability. See, the minor, all incomes are clubbed. All incomes are clubbed, but there are two exceptions. If it is from the skill or talent of the minor, not clubbed. If the child is suffering from disability, then clubbing is not there. Navneet, clear? Okay, coming back. Loss from textile business, 7K. Okay, tell me how many years the business losses are carry forward? How many years the business losses are carry forward? 8 years. Can you tell me the last year? It will assessment year 14, 15 loss it is there. So 15. Okay, assessment year 15, 16. So I'm just calculating 15, 16, 17, 18, 19, 20, 21, 22. Assessment year 22, 23 would be the last. Kuldeep, not 23, 24. It would be 22, 23 would be the last. 8 years. After 14, 15, from after 2014, 15, 16, 17, 18, 19, 20, 21, 22, 8 years. 22, 23 will be the last. So this loss can be set off in assessment year 26, 27. The answer is no, we cannot set it off. Next, long-term capital loss, 1,12,500. Assessment year 17, 18. For assessment year 17, can I set it off? How many years the long-term capital loss is allowed? First of all, long-term capital loss can only be set off against the long-term income, long-term capital gains. But for how many years? Again, 8 years. Assessment year 17, 18. From 2018, 19, 20, 21, 22, 23, 24. Till assessment year 24, 25, it was allowed. Till 24, 25, it was allowed. So we are in 26, 27, not allowed. Not allowed. Short-term capital loss pertaining to assessment year 18, 19, 90,200, 90,200, right? Will this loss be allowed? Assessment again, let's see assessment year 18, 19. So 19, 20, 21, 22, 23, 24, 25, 26. Till assessment year 26, 27, it is allowed. Till assessment year 26, 27, it is allowed. So this will be allowed. Now this will be short. This can be adjusted again short term or long term. 90,200. So I will adjust this 90,000. Okay, you compute the income, then you adjust it. I'll go to the presentation as well. Okay, 90,200. Clear? Any other point that we have left? Let's compute it first. Salary head was not there. House property. Okay. Is this my total income? Is this my GTI? Can I say this is my GTI? Can I say the answer is 12 lakh 22,900? Can I say this? Sorry, this loss of 7K was not allowed. I have mistakenly written it here. 12 lakh 29,900. Is this clear or there is any problem? Everyone, is this clear? Yes or no? At least reply something. Which SD you are asking? Yes, this is camel race, not a horse race, right? Kuldeep says this file is already with you guys, okay? Everyone agrees still here or there is any question? I have written all of the information here. See, I have not calculated the tax. Yes, it will be taxable at the slab rate only, camel race and all. It is an ordinary income. Okay, I have written everything here. Do you think there is still a problem or everything is perfect? Now this is your test now. Is everything perfect here or do you want I have done some mistake here? Or there is something yet to be done? Which set of? 7K is not written, but 7K is not allowed, right? This 7K is not allowed. This was allowed till assessment day 20 to 23. So that's why I've removed that. This loss is not allowed. Anyone else? Please apply your mind. House property set off. Correct. So is this allowed? We are following the old regime, old scheme. Up to how much amount it will be allowed? Up to how much amount it will be allowed? Okay, up to 2 lakhs. Okay, can you set it off against PGBP? Can you set it off against capital gains? The answer is yes. You can set off against all other heads. There is no problem in it. In house property, maybe you can set off against PGBP. Let's set it off against PGBP. Minus 260. Minus 200. Minus 200K. Right? It will come 640K. It will come 6,40,000. So ultimately, this is 134. Now this is it. My GTI would be this much. Is this clear? Is this clear? Okay. It is minus 2 lakhs, right? Let me just write. House property losses. Navneet, you haven't revised. House property losses are allowed in the old scheme. Old scheme, these are allowed. I said in the starting itself. So the answer would be 10 lakh 29,900. I hope these questions are good for practice. Manish, if you can hear, can you please talk to Navneet once from the tech team? Yeah, can you please solve the query of the student, Navneet? Okay, maybe you can just see the chat. He's having some issue, right, in the login and all. Navneet, maybe you can type your contact number to Manishi, right? You can just type a direct message to, you will see tech support. Okay, sure. Yeah, please connect. Okay. Okay, let's move on to the next case scenario. Mr. Rajneesh gifted 15 lakhs to his wife, Ravi, on her birthday on 23rd February 2025. Arun Sagar, I've already told camel race income is a normal income, dog race income is a normal income, buffalo race income is a normal income that will be taxable at the ordinary tax rates, whatever are your slab rates. If you fall in 10% bracket, it will be taxable at 10%. If you 15%, you will fall in 15%. This is not a special type of income and this is not taxable at 30%. It will follow the slab rates. Clear? Okay. Mr. Rajesh gifted, this is case scenario 15 from your model test. Mr. Rajesh gifted 15 lakhs to his wife, Ravi, on her birthday on 23rd February 2025. Ravi lent 600k out of the gifted property to Mr. to Karuna on 1st April 2025 for 6 months on which she received interest. Okay, what is the they want to? Okay, let's see this last line first. Both Rajesh and Ravi wants to pay tax under the new scheme, default tax regime. Default tax regime. Clear? Rajesh gifted 15 lakhs. So, Mr. Husband has gifted to the wife, Ravi, on 23rd February, 6 lakhs. Now, this 6 lakhs she has given to someone else and she has earned interest income. Do you think clubbing should apply? Do you think clubbing should apply? Because it is the money of husband which has been given to the wife, the clubbing will apply. The clubbing will apply, right? Now, next thing, clubbing will apply. So, if you will see the question later on, we also need to calculate the income of husband and wife. Let's see. So, it is Mr. Rajesh, and then it is Rag. We'll do some calculation side by side. Okay, you can just have a quick look at the question, right? First, Mr. Rajesh gift. Okay, now this income will be clubbed. This income will be clubbed. Interest income will be clubbed. How much? Interest income will be clubbed would be 30k. She received interest of 30k. 30k. Arun Sagar, please focus here. Okay, I'm showing the question here for this session. After the session, you can connect with the admin team and they will, these questions are already uploaded in the portal, okay, BOS portal. Even I can see it. The said sum of 30K was invested in shares of listed company. Now, okay, there is a husband has gifted some money, 6 lakhs. From that interest has been earned, that interest has been clubbed, right? Now that interest income has been further invested in the shares of a company. Now that further accretion to the income, will that be clubbed? That further accretion of income, will that be clubbed? The answer is no. The answer is no. But in case of minor child, is that clubbed? In case of minor child, is that clubbed? The answer is yes. Everyone with me. See, husband gifted to wife. Wife has earned something interest that will be clubbed in the hands of husband. Now that interest, whatever was clubbed, that interest wife further invest. The income from that interest investment, now will that be clubbed in the hands of husband? The answer is no. Accretion on income is not clubbed. But in case of minor child, all incomes are clubbed. In case of minor child, even that is clubbed. That is a concept that we had already seen when we had covered this chapter, right? So yes, we will see based on, for the minor child, we see whose parents' income is more, and once it is clubbed in the one parent, then it will remain in that parent, right? So, but is the case of spouse here. So the said sum of 30K was invested in the shares of listed company which was sold for 66K. Now tell me, this further accretion on income, will that be clubbed in the hands of husband? Will that be clubbed in the hands of husband? The answer is no. But what is the gain amount? 66 minus 30. 66 minus 30, 36K is the gain. So it would be the capital gain on sale of shares. Capital gain on sale of shares. How much? 66 minus 30. Sorry, 66 minus 30K. It will be 36K. It will be 36K. Arun Sagar says exemption. Arun Sagar, tell me one thing. Invested in shares of listed company, yes. So, firstly, you need to see exemption is gains in case of short-term capital gains or long-term capital gains, 125K. Arun Sagar, it's fine. Okay. First of all, I'm calculating the income. Okay. Two, three things side by side. That exemption of 125K is for the short-term capital gains or long-term capital gains? That is only for the long-term capital gain. That exemption is for the calculation of income or only for the purpose of computation of tax? That exemption is only for the purpose of computation of tax or calculation of income as well? Only for the purpose of calculation of tax. Even if this would have been a long-term capital gain eligible for these 125K, still it will remain in the income. That is only for the purpose of calculation of tax. Clear? So you need to see these small points. If you will take care, then your exam is superb, right? Okay, next thing. Securities transaction tax was paid on purchase and sale of share. The balance amount of gift was invested in 120. Sorry, the balance amount of gift was invested on 1st April 2025 as by capital as capital by Ravi in her new business. See, 15 lakh was gifted to the wife, 6 lakh was given to Karuna. Now the how much is the balance left? 9 lakh is left. 9 lakh is invested into the business. 9 lakh is invested into the business. Again, the clubbing from the business will be there. Now she is running her own business. She is running the entire business. So she suffered loss. Even if the income is clubbed with, the loss will also be clubbed. If the income is to be clubbed, will the loss will also be clubbed? The answer is yes. Even the loss will be clubbed. So how much is the loss? 22K. Let's suppose it was not a proprietorship business. I'm just asking extra. It was a partnership firm. Then you see the capital on the beginning of the day, beginning of the year, 1st April of the year. Then you see and then you do all those calculations, right? What is your share? You calculate the share, right? Based on the capital at the beginning of the year. I hope you remember that concept. So this is a loss from business that is being clubbed. Loss clubbed from business. Next. Next is Ravi is working for a private company as sales executive for 62K. Now, will this salary be clubbed? They haven't given any information for the substantial interest. Nothing like that. The salary will be taxable in the hands of Ravi only. 62K per month. Salary is 62K per month. 744K. Next. She paid 3,500 towards tuition fee of her daughter Ria. Is this relevant? They are following the new regime. Is the tuition fee relevant? ATC relevant? The answer is no. ATC is not relevant. Rajesh is working with the MNC with a monthly salary of 64,000. Salary income of Rajesh 64,000 into 12. Next. He gifted 1,25,000 to Ria. Who is Ria? See here. You need to see the last line. Towards tuition fee for a daughter Ria. They have a daughter Ria. 1,25,000 was gifted to her. The amount is deposited 2-year term deposit with SBI on which interest of 11,500 is there. Now there is an interest income. Interest income of daughter. Will that be clubbed? You need to calculate the income first. This is the income of Rajesh. This is the income of Ravi. In whose hands the income will be clubbed for the minor child? In whose hands the income will be clubbed? Husband or wife? Rajesh or Ravi? Ravi. The income is more, 776 and 780. So, interest income of Ria, how much? Okay, do you remember one provision? If let's suppose last year it was clubbed in the hands of Rajesh. If last year the income was clubbed in the hands of Rajesh, this year will I club it in the income of Ravi? No. If once we have opted for one spouse, then it will remain in that parent only. Until unless the assessing officer you get it approved and all those things, right? So just don't forget the thing. You don't see just the income always, right? Interest income of Ria is this much, right? Another thing, can I get something called 1032, 1032, 1500, 1030 to 1500? Can I get this? Can I get this 1500? Vaishnavi. Not in the new regime. Not in the new regime. New regime, section 1032 exemption of 1500 is not allowed. See, there are very small points. Clear? So let's see it now. In whose hand interest income from Karuna and interest on fixed deposit in the name of Ria would be included? So interest income of Karuna would be included in the hands of Rajesh and Ria would be in the hands of Ravi. So the answer would be this much, this one. D should be the answer, right? Option D will be the answer. Next. In whose hands loss from business and capital gains? Loss from business is in the hands of Rajesh, capital gain in the hands of Ravi. So it will be option number C, loss from business in the hands of Rajesh and capital gain in the hands of Ravi. Total income of Ravi, the total income will be, you just total it up. 780 plus, it will be 791, 500. One more thing, okay, they are asking the total income. We haven't given the salary deduction. Standard deduction from the salary we haven't given. Standard deduction. Again, you can forget this, please make a note of it, 75K. Again, here also standard deduction they will get. SD 75K. So it will be 7,16,500. See here, even the 7, okay, uh, other options may confuse you, right? So 7,16,500. And what would be the income, Mr. Rajesh? 7 lakh 1,000. 1,000. Okay, this option is correct, incorrect. Just a typo here. A, B, C, and D. This is option number C. This is option number D. Right? So D is the answer. 7 lakh 1,000. Everyone clear till here? I hope everyone is enjoying the session, right? 2, 3. Okay. Okay. So what time we need to have the break, Manish? We need to have the break now. Okay, maybe fair enough. We'll take so since it's 2.5. Yeah, almost half time is there, so we can take a break, quick break. How much minutes? Yeah, 10 minutes is fine. Yeah, 10 minutes break. So we'll just quickly take a 10 minutes break, and yeah, so we'll just it's 7:20, so we'll start sharp at 7:30. Okay. So thank you. Yeah, thank you. Sorry. Okay. The next question we're doing a case scenario number 17. So I'll see one thing. Let's skip it for now quickly. Okay. I'll skip this scenario. I'll give the solution. Let's see if the time permits will do. Otherwise, this is simple. Okay. So, or maybe I'll quickly ask you guys. Uh, Based on this table, tell me if the is the tax audit applicable or not for the financial year 25-26. Is the tax audit applicable or not for the financial year 25-26? Everyone, is the tax audit applicable for financial year 25-26? Abhishek, Gayatri, Tanunlinga. Everyone, is the tax audit applicable for financial year 25-26? What is the limit for tax audit? What is the limit for tax audit? Everyone, I've received no answers. I hope you can hear me or there is some. Guys, can you please confirm you are back and we can start? Aditya, Ajay, Arun, Sagar, Kuldeep. Yeah. Someone is asking me, Arun Sagar, okay, tarot card reader, the one who sees your cards and tell about the predictions of your life, right? So they're into that business, okay? They're providing their services. Okay, the limit is normal limit is 1 CR. 3 CR is for 44 AD Navneet, not for 44 AB, right? 1 CR is the normal limit. For profession, how much is the limit? Yeah, 5% and all, then other extended limits will apply. Profession 50 lakh is the limit, right? Normal limits. So you see here 98 lakh is the okay. For the tax audit for financial year 25-26, you will see the current year or the previous year. Means I mean to say you will see 25-26 or 24-25. You will see the preceding year or you will see the current year. Okay. Navneet says preceding year. Okay, I am my question is on 25-26. My turnover is 98 lakh 49 lakh. Last year it was this much. Tell me, is the audit required? Now you are saying we will see the preceding year. The answer is no. The answer is no. We will see the current year. We will see the current year, previous year. See, for the TDS, again, clarification. You remember section 194C for the TDS? There you see, they, okay, wait. I'm not confusing you in the assessment in previous year. Let's keep it year number 1 and year number 2. Okay? Year number 1 and 2. I will write it like this. So I am checking for year number 2. I am checking for financial year 25-26, year number 2. Then I need to see the tax audit applicability. Then I will see the turnover for year 2 itself, the current year. I will see the turnover for the year 2 itself, the current year. Why some of you are getting confused in the preceding year is, in case of TDS provisions, whether you see the TDS is applicable or not, let's suppose section 194C is there, right? You see whether the client, whether the taxpayer was having the tax audit in the last year or not. There you see the preceding year. But in section 44 AD, it is financial year 25-26. You will see that limit is 1 CR and 50 lakhs, which is below the, so tax audit will not be applicable. So the tax audit will not be applicable. Is that clear? Second, everyone, are you with me till here? Are you with me till here? Is it clear? Can I proceed? Everyone, can I proceed? Clear. She paid an amount of 12 lakhs to a contractor for polishing her old furniture in her self-occupying property. Now there is a old furniture. See, Kuldeep, they're into the agency business as well as providing services as well. They're doing both the businesses, right? So it is tarot card is surely a service. It is a service, right? And they're doing agency business as well. So it is business as well as profession, both they're doing. Okay, next question, next line. She paid an amount of 12 lakh to the contractor for polishing her old furniture in her self-occupied residential rent house property for 12 on 12th April. Further, on 5th of June, she has paid for the renowned interior designer for the same residential house property. Same residential house property. Okay, Navneet, hold on. I'll come to it. Let me explain this point first. Okay, they have paid 12 lakh to the contractor. Navneet, Navneet, please pay attention here. I'll come to it. Okay, I'll come to it. Okay, so they have paid 12 lakh to the contractor, and the same contractor they paid 2.5 lakh. First one 12 lakh they paid for the old furniture, polishing their old furniture. Second one they paid for their same residential property. They paid for the interior designing. Which section of TDS will be applicable? Which section of TDS is attracted? It is a contract 194C, 194C. Okay, Arun says 194M. 194, what is the limit for 194M? What is the limit for 194M? 50 CR. 50 lakhs, not 50 CR, 50 lakhs, 50 lakhs. Is the amount exceeding 50 lakhs? The answer is no. Tanu, it is not. Okay, Tanu, tell me one thing. You are hiring someone to polish your furniture. You are hiring someone for the interior designing. Is it a professional service? The answer is no, it is a contract service. It is a contract service. So 194C is applicable, 194M is not applicable because it is not exceeding 50 lakhs. So in case of C, will TDS be applicable in this scenario? Will TDS be applicable? Navneet says yes. What about others? Quickly, Arun Sagar, Tanu. Kuldeep, please do answer. Prajapati, Yogita, everyone, please do participate. Adal, okay. Tanu says no. Tanu, why no? Everyone else says yes. Because of personal purpose. You all have missed one point. Only one answer is correct. Tanu's answer is correct. 194C is not applicable when it is used for personal purpose. So no TDS here. No TDS. Clear? No TDS. Next. Next is on 28th May 2025, she sold one commercial property for 50 lakhs. The stamp duty value on the date of registration is 58 lakhs. The stamp duty value on the date of agreement is 54 lakh. See, when they entered into agreement, the value was 1 lakh 54 lakhs. But at the time of registration, when they have gone for registry, the stamp duty value has increased for 58 lakhs. Stamp duty value has increased for 158 lakhs. Clear? Now, it was purchased for 40 lakhs on 28th July. First of all, is it long term or short term? Capital gains. 28th July 2023 to 28th May 2025. Less than 24 months? Less than 24 months, Kuldeep. 24 months is the criteria for property. It is short term. It is short term. Many of you are doing mistakes. Please do revise. Do revise. It is short term. Right? It is short term. Now, in case of short term capital gain, how much will be my sale price? Now, let me write it here. So, at the time of agreement, my stamp duty value was 54 lakhs. When I had gone for registry, my stamp duty value has increased to 58 lakhs. My actual sale price is 50 lakhs. So I can quickly compute the capital gains. I will just take the actual sale price minus the cost. Cost is 50 lakhs, 40 lakhs, sorry. Now, what will be the sale price I will take? Can anyone tell me? What will be the sale price I should take? Okay. First of all, tell me, on the date of agreement, you've already paid some money via the check. If we need to apply the provisions, which stamp duty value we will take? We will take 54 lakh or 58 lakhs? We take on the date of agreement, we will take 54 lakh. Out of these two, we select 54 lakh, right? Paid by check, right? Now, we need to see the sale price is 50 lakhs. As per section 50C, you see the 110%. You see the 100. If, see, you see your actual sale price, you see your actual sale price, and the stamp duty value, whichever is higher you take, but up to 110% of sale consideration. It's, if the difference is there, then it's fine. Now tell me, I will take the 110% of 54 lakhs into this. This will come. This will come. Okay. This I will, let me take the 110%. Now I will reduce it. Sorry. Yes. Now Navneet is correct. I just tried to confuse you guys. I will not take the 110% of 54 lakhs. It will be of the sale consideration 50 lakhs. So 50 lakh is my sale consideration. I will take 110% of it. It is coming 55 lakhs. 55 lakhs. Now, is my stamp duty value up to 55 lakh? The answer is yes. 50, it is greater than 54 lakhs. So means I can take the actual sale price of 50 lakhs. So the final answer will be 50 minus 40, 10 lakh would be the gain. And this gain would be the short-term capital gains. Next, brought forward long-term loss. Can you set off the long-term loss against short-term? Can you set off the long-term loss against short-term? The answer is no, you cannot set off. During the year, Ms. Chanchal incurred a loss of 70 lakh while trading in agricultural commodity derivatives. Trading in agricultural commodity derivatives, 70, no CTT paid. No CTT paid. No CTT paid. Can you set off against the business income? Can you set it off against the business income? Yes. No, no, no. You can set off. It is not a speculation. Agriculture commodity derivatives. It is not a speculation. You can set it off. You can set it off. Let's see. It says what is the loss that can be carried forward. Assuming 45 lakh is the business income, 25 lakh is the profession income. So 45 plus 25, 70 lakh is the income. So I can set off the loss of 70 lakhs. I can set off the loss of 70 lakhs. And the balance, this 5 lakh 50,000 will be carried forward. The answer is A. This 70 lakh loss is non-speculative. I can set it off. I can set it off. Clear? Okay. Question number 1, 2, and 3 we are already done. You can just read it. I've explained it. Okay. Case scenario number 18. Okay, what I'm doing is I will not solve it completely. I will just discuss the adjustments, okay? Because that we will save on some time. We'll be able to do more questions. I think discussion is better, right? So Mr. Abhishek Seth, aged 42 years, is working as a CEO of Soil Limited. He provides the following information of preparing and filing of his return. Salary, is that taxable? Is salary taxable? The answer is yes. Dividend, taxable? Is dividend taxable? Quickly read it. I'm not reading it. Is this dividend income taxable? Is dividend income taxable? In point number 2, everyone says yes. Only one answer, Kuldeep. Why, Kuldeep? Why no? Why no? Received, declared, and received in July. Can you see it? We are filing return for 31st March 2026. This is the income of July 2026 next year. So this is not income for the current year. See, one adjustment, your entire question is wrong. Interest income on savings, yes, it is allowed. Okay, let's see whether they're following the old scheme or new scheme. They say they have opted out of the default regime. They have opted out of the default regime. Clear? Now, if they have opted out of the old regime, can you tell me while calculating the tax liability, maybe I'll solve this question. Maybe no problem. See, if required, we'll extend the session a little bit, okay? But this question is good. I'll solve it. So Mr. Abhishek. He is having a salary income. How much? Salary income of 1 crore 35 lakhs. Right? Then from the salary which we will give the standard deduction. We'll give the standard deduction. How much? How much will be the standard deduction? How much will be the standard deduction? Navneet says 75. Navneet, is he following the old scheme or new scheme? Is he following the old scheme or new scheme? We have seen he has opted out, so it will be 50K. Please see it first whether you are following the new scheme or old scheme, right? Very important to see. Next, dividend income non-taxable, interest taxable. Okay, when I'm going to the interest, can you write one note for me here? I should take care of one thing. He's aged 42 years. Aged 42 years, 24, 530 interest income. What I should consider? He's following the old scheme. I should consider one more thing. He is not senior. He is 42 years. I should consider 80 TTA deduction. Yes. There will be no separate information for it. 10K. 10K would be the. Okay, Tanu, there is a difference in exemption and deduction. It is a deduction, not exemption, right? 80 TTA is a deduction, not exemption. Next. Long-term capital gains on transfer of residential house in Mumbai on 15 December. Okay, long-term capital gain is there 173,540. This is a long-term cap gain. This is a cap gain. Maybe I'll do one thing. I'll just put an inner column here. Okay, this is the inner column. This is the outer column. Normally, if you do like this is better for presentation. Then short-term capital gain on sale of listed equity shares, STD paid at both time of transfer and acquisition, 73 lakhs. STCG 111A, how much? 73 lakhs. 73 lakhs. Next, this was LTCG. Above one was LTCG. Next, they say he also furnished the following details: 3-year post office time deposit, 3-year deposit. Can I get a deduction under ATC? Can I get a deduction under ATC? It is a 3-year deposit. It is a 3-year deposit. Can I get a deduction? Can I get a deduction? The answer is no. 5 years is required. Contribution to PPF 35K. ATC is allowed. Tuition fee 3 children. Bharati Senior Secondary School 20K per annum per child. How much deduction will be allowed for tuition fee? How much deduction will be allowed for tuition fee? 20K into 3, 60,000. 20K into 3, 60,000, right? It is maximum up to 2 children. So 20K into 2, 20K, sorry, 20K into 2, it will be 40,000. Subscription of NHI redeemable bonds. Can you tell me the section number for this? NHI bonds. In which section we purchase the NHI bonds for 2 lakhs? 54 EC. It is allowed against long-term capital gains. Can I say 54 EC is allowed here? 54 EC. 2 lakh. So how much maximum I will be allowed? Up to gain only I will be allowed. So it will be 173. 173. Right? Next. Now they have son, Master Dhaval, age 15 years, minor son, income from quiz competition, 25,000. Will I club it? Will clubbing apply? Will clubbing apply? The answer is no. It is from the skill. Bank deposit interest. Bank deposit interest. 9,500. 9,500 bank deposit interest. How much I should take here? Bank deposit interest. How much should be taxable? 9,500. 9,500. It should be taxable. Why nil, Tanu? Why nil? 1,500 exemption. That is in section 1032. In case of old scheme only. See, wherever you will quote the section number, that will be an added advantage. And there are not many sections that you need to see. You just learn the major section numbers. That's it. Clear? So how much will be the income? Okay, let me just copy it here. 73. Okay, this will be the income. This will be the give me 1 second. I think there is something that we need to check. One 173 is fine. I think dividend income also has been considered in the solution. It should come 231372,530. Have I done something wrong? 5,90,000. Okay, they have considered the dividend income as well. Dividend income. But I think it should not be declared and received in July 26 is I think not fine. It should be July 25, okay? It should. Okay, Aditya, it says has opted out of the default regime. It means they're following the not following the default regime. It means that that's why they are following the old tax regime. Okay, due to accrual basis, this has been taxed. 5,90,000 due to accrual basis, it has been taxed. That's what Arun Sagar is saying. I need to quickly cross check the exact reason of it. Okay, maybe this income is included. This income will be taxable. Okay, so I'm adding it. No, no, Aditya, this is a simple plain English language. You are saying opted means we will no. Opted out. What is the default regime? 115 BAC. You follow the new regime by default. They say opted out means they have not opted. They have opted out, right? Of the default regime. It's no not following. Opted out. Out is the main word, right? Opted out. So that's why they're following the old regime, right? So this income is 213,7 2 crore 13 lakh 72,530. Then you will give a deduction. You will give a deduction, right? 80 TTA, and then there is ATC also that you will give 35 and 40, 75,000. ATC 75,000. So it would be 2 crore 12 lakhs 87,530. Is that clear till here? Is the total income clear? Is the total income clear? Now tell me the tax liability. What is the tax slab rates? Tax slab rates 0 to 2.5 lakhs, then next 2.5 lakhs, then 5 to 10 lakhs, then greater than 10 lakhs. So first it is 0, then it is 5%, 12,500. Then next 5 lakh it will be 20%, so it will be 1 lakh. Then over 10 lakhs. So this minus 10 lakh is this much income. You take the 30% of it. You take the 30% of it. So how much will be the total? Am I correct? No. Yes, Abhimanyu is correct. Special rate income. Salary is normal rate, interest normal rate, long-term capital gain not there. There is a special rate income of 73 lakh. There is a special rate income of 73 lakh. How much is the special rate? Short-term capital gains? 20%? 20%? So how much should be the tax here? This much. So I will reduce this 73 lakh income from here. Let me write it like this. Let me write the income here. Here up to 2,50,000, the next 250, the next 5 lakh. So it total comes out to 184, and then total is 184 plus 73, 250. Yeah, this is clear. Now the tax amount is this much, 38 lakhs plus 14 lakh. It is 53 lakh. It is 53 lakh 56,000. We add 4% cess. It is 55 lakh 53 lakh. Uh, Sorry, my calculation was wrong. It was 12,500 here. I've mistakenly written 1,25,000 here. Okay. So this will be 5356. I'm sorry, give me 1 second. I think I've done some mistakes here in the calculation. Right. So, yes, now it will be the total. Some Excel formula I just missed out. So it will be total 54 lakh 68,000. 54 lakh 68,000. Are you clear till here? Simple calculation of tax. Some Excel formula problem was there. That's it. Okay. Next, surcharge. What is the rate of surcharge that will be applicable? Okay. The income is 2 crore 13 lakhs. More than 2 crores. What is the surcharge rate? Old scheme. Old scheme. Sorry, the total income is 2 crore 12 lakhs. 2 crore 12 lakhs. Right. It is 25%, but due to special rate income, we need to see. Special rate income. Special rate income is 73 lakh. Maximum surcharge rate will be how much? 15% on this. You see the balance income. Balance income is how much? 139. Now, is it exceeding 2 crore? Balance income, is it exceeding 2 crore? The answer is no. So you will apply here. You will apply here to 15%. So it will be on the total 15% directly I can apply. So on the tax, I apply the 15%. I apply the 15%. It comes out to total of this much. Then 4% says into 4%. The total comes out to this much. 65 lakh 40,000 635. I will round it off to the nearest tens. 65 40 640. Is that clear? Okay, one thing to note, in case of surcharge, the special rate income maximum is 15%. Here I applied 15%. But let's suppose the income would have been between 1 to 2 CR, then I will not bifurcate it like this. I will not bifurcate between the special rate and the normal. If the income is up to 2 CR, then in that scenario, I will directly take the total income. Because the income was crossing 2 CR, that's why I bifurcated like this. I hope you understand that. Clear? Okay. So this was a good question. Let's Okay, quickly let's see. We'll discuss the adjustment in this question. Case scenario number 23. Case scenario number 23. What is the first question? Let's see the question wise. What is the interest allowable under section 24B? In case of 24B, interest is allowed on paid basis or accrual basis? Interest is allowed on paid basis or accrual basis? Everyone? Accrual basis. Yeah, Arun Sagar, in the previous question you have a doubt. You're writing no as well, yes as well. How can I understand? See, if you have any doubt other than these questions, I will remain in the class, no problem. You can ask me any doubt after the class, okay? I will stay in the class until all your doubts are resolved. Okay. So 24B, so it is allowed on accrual basis. So this is the concept here tested here, accrual basis. I'm just quickly skipping this. I'm just discussing the you can just attempt the complete question, right? Second, second question is on the chapter 6A deduction. Chapter 6A deduction. Yeah, this point I will do. This point I will do specifically. There is a repayment of loan. If there is a repayment of loan, in which section the deduction is allowed? They have repaid the principal of 25 lakhs and 5 lakhs. ATC is allowed. How much maximum ATC is allowed? How much maximum ATC is allowed? 1.5 lakhs. 1.5 lakhs. Clear? Next, Mr. Akash owns another house. He transferred this house to minor daughter. Maybe give me 1 second. Yeah, let's see this paragraph. This paragraph. Electric vehicle. Electric vehicle. Is there a deduction from the electric vehicle? Can you tell me the section number? Can you tell me the section number? Electric vehicle. 80 EEB. 80 EEB. Arun Sagar. The loan was sanctioned on 1st April 2022. It is before 31st March 2023, right? There is an interest of 7 lakh that you have paid. How much is the maximum deduction allowed for the interest? How much is the maximum deduction allowed for the interest? It is 1.5 lakhs. 1.5 lakhs. Clear? Then you paid for the mediclaim 20k. Then up to 25k the health insurance is allowed. It's fine. Clear? Okay. One more question. Study this paragraph, Mr. Akash. This paragraph now. I've highlighted with red color. Mr. Akash owns another house in Haryana. He transferred the house to his minor daughter, Miss Sia, on her birthday as a birthday gift. Miss Sia gave the said house to the local panchayat at a rent of 5,000 per month. Minor daughter, will the clubbing apply? In case of minor daughter, will the clubbing apply? Will the clubbing apply in case of minor daughter? Everyone says yes, only one answer is correct. See, guys are not revising. It means, let me show you one chart from the previous session I took. This is a minor daughter, not minor married daughter. This daughter is not married. Please take care. This daughter is not married. There was a chart I made. Yeah. Can you see this chart? Let me just copy paste this chart as well in today's file. See this. In case of minor married daughter, if you have transferred the house property, the clubbing will apply. Other asset, the clubbing will apply. In case of minor child other than minor married daughter, house property, deemed owner, you will, the person who has transferred, the parent will be treated as deemed owner. Other asset, the clubbing will apply. So this question is here. This question is on deemed owner, not on clubbing. Getting it? Only Arun Sagar was correct. Okay. Then I think these are the technical points in this question which I have already discussed. Now these questions are from your MTP model test papers, right? Mr. Vishal, let's see what is the requirement of the question. What is the total income? They are asking you to calculate the total income if he has opted out. Now, okay, who was asking me what? Now we are following old regime or new regime? We are following the old regime or new regime? Everyone is clear now? Opted out is written. Old regime we are following, right? Old regime. So, and losses to be carried forward. Mr. Vishal, age 33 years, submit the following information. Mr. Vishal has a house in Delhi. His financial year 24-25, he had transferred the house to Miss Deepika, daughter of his brother, without any consideration. House would go back to Mr. Vishal after the lifetime of Miss Deepika. Now, after, see, we have studied this provision. If it is a revocable transfer, if it is irrevocable till the lifetime, still it is treated as irrevocable. With the condition that 10% of the rental income should go to Mrs. Vishal. Will the clubbing apply here? Will the clubbing apply? See, if an asset is transferred for the lifetime, it is an irrevocable transfer. If the asset is transferred for the entire life, it is an irrevocable transfer. But here, even if it is an irrevocable transfer, see here, the 10% of income is going to Mrs. Vishal. It means the person is having the indirect benefit in the income. It means this transfer will not be considered irrevocable and the clubbing will apply. Clubbing would apply. Clubbing would apply because if this line would not have been given 10% of rental, then surely the clubbing will not apply because then it is irrevocable. But now, for the benefit of Mrs. Vishal, the income is being transferred, 10% income, share in income. Now the clubbing will apply. Clubbing will apply. Clear? So how much will be the income of Mr. Vishal? 5,50,000. Okay, sorry, 5,50,000. Clubbing will apply. Now this is the house property income. So I will take the standard deduction of 30%. This will come. This will come 385K. Next. Mr. Vishal hold preference share in A Limited. He instructed the company to pay dividend to Miss Chandni, daughter of his servant. The transfer is irrevocable for the lifetime. Dividend receivable by Miss Chandni during the previous year is 4,50,000. Now, during the lifetime, it is irrevocable. Even the person, Mr. Vishal is not receiving any income, share of income. Will the clubbing apply? Will clubbing apply? Linga says no. Arun Sagar says no. It is the transfer of income without transfer of asset. Transfer of income without transfer of asset. Clubbing would still apply. Clubbing would still apply. Isn't it? This is the transfer of income without, if you transfer the preference share, then the clubbing will not apply. It is the preference share income. It is the rental income. Vishal had a short-term capital loss 16,000 from the sale of property and long-term capital gain. Can I set off the short-term loss against long-term gain? So there is a short-term loss 16K, STCL 16K, long-term capital gain 15K. I can set it off up to 15K. Let's see for the balance 1K if we are able to adjust. Otherwise, we will carry forward. Other income, interest income from the saving bank. Is something else triggered from in your mind? Saving bank, interest income. Something else is triggered. Not TDS, ATTTA. We need to take the ATTTA. This person is 33 years, so 10,000, right? Not ATTB. That is for seniors. Cash gift 75K received from the daughter of his sister on his birthday. Sister's daughter, is sister's daughter a relative? The answer is no. So it is gift is more than 50k, so gift will be taxable. 75k is the gift would be taxable. Next, income from betting 25k would be taxable. Card games again would be taxable. Loss or maintenance of race horses. Can I set off this loss? No, because from the loss from maintenance of race horses can be set off against the income from maintaining of race horses only, right? So there is no other income. I cannot adjust it. So what will be my net income? My net income, my GTI would be 11 lakh. Okay, I haven't given it headwise, okay, but you need to present it headwise. We'll discuss about presentation towards the end, okay. I just want to discuss the concepts first. 11 lakh 46,000. Now this short-term loss of 1k you will set. This will you will carry forward. This you will carry forward. The low income, then the loss from race horses also you will carry forward. You will also carry forward the loss from race horses. Clear? See, one thing here, they've asked you the total income. They've also asked you the losses to be carry forward. If you will not write separately, you will not get the marks. So you need to write 1k loss will be carry forward, race horses loss will be carry forward. 14,600. So you need to write it because it is specifically asked in the question. Clear till here? Any doubts in this question? Okay. The final question for today, then I'll take open session. Whichever doubts you have, I'll solve that. The following are the details of relating to Mr. Roshan, a resident Indian relating to the year ended 31st March 2026. They have these incomes. Then they say Roshan's wife. Okay, there is something else given. Then they say that they are required to compute the taxable income of Mr. Roshan for the assessment year 26-27. If you have shifted to opt out of the default regime, it means they're following the old scheme, old regime. Calculate the income and losses to be carried forward. First income, short-term capital gains. Capital gains, STCG. STCG how much? 1,50,000. Next, loss from house property let out. 2,50,000. Next, loss from speculative business. Can I adjust the loss from speculative business? The answer is no. I can adjust it against other speculative business only. Loss from speculative business carry forward because there is no other speculative income. Loss from card games. Can I use this? No. Casual income losses are not allowed, even not carry forwarded. Brought forward long-term loss of assessment at 23-24. Long-term capital loss 86k. There is a brought forward. Let's see if we are able to adjust it. Dividend ABC 11 lakhs. IFOS dividend 11 lakhs. Loss from T business 1,06,000. T business, you remember something? T business, you remember something? 60% income is exempt, 40% is taxable. So same rules will apply to loss as well. How much loss will be allowed? Income or loss, whatever is there, the same rules apply. 40% loss will be allowed. So this loss will be allowed against which incomes? Can you adjust the loss from capital gains? The answer is yes. Business losses you can adjust against capital gains as well. So this is a loss of T business. right? Next. Okay, this is it. By the way, just asking, this loss from T business, can you set off against the dividend income as well? Can you set off against the dividend income as well? The answer is yes. The answer is yes. But normally, if you ask me logically, why would I haven't done it? Because this income is taxable at 20% directly. This income is taxable at slab rate. So I see the benefit. I do the computation both ways, and we adjust with the higher rate first. See here, this loss of house property, can I set off the complete? No, old scheme I can set off, but only up to 200k. Let's suppose I set it from here. Only up to 200k I can adjust. 2 lakhs. So this will be 9 lakhs now. See, up to 10 lakh, the rate is 20%. And in fact, the slab rate is there. Here, the direct rate is 20%. So I will adjust the T business loss from here first. In fact, you don't have to calculate, you have to calculate the total income only here, not the tax. So how much is my total income? So this will be, okay, there is one more item here. Mr. Roshan's wife, Shamita, has a monthly salary. Roshan holds 21% in the company and Shamita is not adequately qualified. Substantial interest, substantial interest, more than 20%. So this salary will also be clubbed. This salary will be clubbed. This will be the salary income. How much? 25,000 into 12. So this income will be, see, let me do it here. So there is a salary income. Okay, yes, deduction of 50k will also be there. This you don't forget. So there is a salary income of 250k, capital gain of this much, cap gain. This is salary, right? Then you have this 9 lakhs. Ultimately, net would be 12,57,600. See, this low, so you can adjust from IFOS as well, and you can adjust from salary as well, whichever it's fine. Because house property, your loss, you can adjust from both. You want to adjust from salary or IFOS, it's fine. So this will be the total income. This will be the total income. Is this clear, everyone? And the balance losses, 50k loss of house property you will carry forward. This brought forward loss you will carry forward. Loss from speculation business you will carry forward. Okay. Now we are done with a lot of questions. I will upload this answer file as well. Okay. Here you can get the presentation. Now for this, I'll tell you one scenario. Some students face problem in the presentation part. This has all the answers as well. Okay. So you can get it. You will get this file in case you want to see it again. Now, see, whenever you approach these types of questions, you need to see the presentation part. I will say you always use a table, right? Let's suppose there is a question. This is the page you have. This is the page you have. You will draw out a column here. You will write the computation. You will write here computation of total income of Mr. This. You will write the assessment year here 2026-27. These are the mandatory things you write, right? Then you can start with heads of income. Income under the head house property. Do not write HP and all. Write the complete names, house property and all. Okay, Abhimanyu, let me clarify your doubt first, then I'll complete. You are saying 100k set of against. Okay, this house property you can also set off. Yes, you can also set off from capital gains. Yes, you can do it. And then balance from the dividend income. That is also fine. Clear? Income under the head house property, you solve it, right? See, in the question, you don't know the complete question. Whenever you get 15 minutes time for the reading, please utilize that time fully, right? Now, income under the head house property. Let's suppose never keep the paper congested, okay? Maybe let's suppose you may foresee there was, I read the question one time, you may foresee there is some adjustment coming here. You can leave some space. And then you, whenever, let's suppose now the capital head income comes. Now you can write capital head, capital gains, income from income under the head capital gains, right? Don't worry about the space in the exams, right? Let's suppose you had a very little space here. You forgot to give. You had to write a note here. You can just put a note here. Note, refer note number one. The examiner will, whenever the paper checker will be there, they will surely refer your note. And let's suppose you know that this entire calculation will take 1.5 page. You keep 1.5 page. In fact, keep 2 pages. I will say keep some extra space, and then after that you start writing notes side by side, because you know in your exam the the ex, as long as your calculation is important, your notes are equally important. You can start with any sequence, okay, Kuldeep. It is not mandatory that you start with salary only, right? But normally you can start with any, but IFOS normally comes at the end, okay? You can notes. See, always keep a space. See, it is not going to be like this. You need to manage the time as well, right, in the exam. So it is not going to be like this that you solve the question first, then you will write all the notes. That is not practically possible, because you cannot apply your mind again and again to the same adjustments. You leave 2 pages or whatever it takes, then you start writing notes. Let's suppose I had to write about tea business. Now, in the last example, what I will write, now 60% of the income of the tea business is exempted, 40% is taxable, so only 40% loss is allowed. I will write a note here directly. Clubbing of income, I will write, okay, there is an income of the minor daughter that is to be clubbed. Income of minor son to be clubbed. As per the old scheme, the section 1030 to 1500 deduction is allowed. So those all notes you write side by side as and when you make the adjustments above. That way you will be able to achieve it easily. Clear? See, with this way, don't take a pressure of presentation too much. You just follow it this way. Try to attempt the complete paper, and you will be able to do it. Clear? And if you know the concept, this is not tough. There are mock tests as well. Do practice out the mock test so that you can prepare well. Think of weightage, the GST and the income tax is there, right? There is no, I don't think there is a specific chapter-wise weightage which is given. All the chapter, see, you can get adjustment from any chapter, right? There are only 7, 9 chapters or something, right, in income tax, right? So in one question, they can test you on all the chapters. How can I tell you the weightage, right? So every chapter is very important. Kuldeep, it's fine. You attended the mock test, but you couldn't complete it. It's fine. Then ultimately you need to improve on. You write some more mock tests so that you are able to better accomplish it. In branches, how many times we can take mock test? Aditya, I'm not sure of those things. I think there are two mock test paper. In my time, it used to be there, but you can just cross check it. I'm not just fully aware of right now in the branches. Okay. Yeah, two. In fact, I'm allowed unmuting as well. If anyone has any query, you can also unmute and speak. Officially, okay. We have talked about the presentation as well. So this way you can present, right? And yeah, now if the now we are done with the questions. If you have any queries, you can just quickly unmute and ask as well. Yeah, Arun Sagar, please go ahead.
Sir, actually, I have a doubt
Yeah.
of Section 84C. So means in case assume that the property value is under 100 rupees, but wife is paid 92 rupees something. Okay, there is a one definition. In case wife is doesn't pay the adequate consideration, then clubbing going to apply. In this case, I need to be considered 84C means 110% means match with the See, there is a
Which section
value
you are
for
referring?
property as per the government.
Which section you
Sir,
are referring?
84C, stamp duty, 84C.
84C, 50C it is.
Okay, sorry, sir.
That's why I was
50C.
confused. What is 84C? Yeah, come again. 50C. Yeah, come again. Come again with the question.
Sir, I'm asking, in case the property value is 100 rupees, why if you pay a 92 rupees? There is the one definition, okay, when going to clubbing apply, if the wife doesn't pay any point consideration, then clubbing will attract. In that time, okay, she paid 92 rupees. So I can check with a 50C means, okay, meet with the stamp duty as per the government. Otherwise, directly I need to be apply the clubbing
Wait,
provision.
you're mixing the two concepts, okay? See, Arun Sagar. First thing, 50C applies for the capital gains. Clubbing is a different provision, right? Now, first thing is whether you see clubbing will apply or not. That is one thing. 50C, that is a capital gain calculation you do. Clubbing, you see in whose hands the income will be taxable. First of all, you determine that. Second thing, when you go to the computation, then you go to the 50C and all. 50C says if you are dealing in property, then the transaction should have higher value. You cannot you can don't do transaction below that because people try to underreport the income. When the sale price will be underreported, then ultimately the income will be underreported. So they say at least whatever stamp duty value is there, you need to do the transaction at that much point. So it is a minimum amount that you need to deal with. So that's why that is the sale price. Even if you have executed the transaction at a lower amount, for the purpose of capital gain, we will take the higher amount. Let's suppose stamp duty value is 40 lakh. You have done the transaction at 25 lakh. Still, they will tax you at 40 lakh only, considering the sale price to
Sir,
be
but
40 lakh.
in this case, I need to consider two things because husband case it will apply a capital gain head. Wife case apply in income from other source.
So yeah, see, no, if that is not inadequate. See, if the actual transaction is at 92 lakhs only, if the actual transaction is at 92 lakhs, wife paid 92 lakh, it's fine. The income will be taxable in the hands of wife only. See, sorry, come again. You are saying the wife paid, buyer pays or seller
Yes.
pays? Sorry,
Actually, wife paid is his husband.
okay,
Sir,
wife
assume
paid
that
to the
there is
husband.
a property, okay, anything. The asset is transferred to the wife. Wife, okay, actually that price of the asset as per the market is 100 rupees. Wife paid only 92 rupees. In case assume
Okay,
that this is a building.
fair
In
enough.
this
Now
case,
I'm getting your query. Okay, now wife, let's analyze this. Let's analyze this over the Excel. Now you are saying husband and wife. Husband is
yes.
selling off or paying. Husband is who is the buyer?
Sir, buyer is a wife.
Buyer is the wife. Now wife paid 92, 92 lakhs, let's suppose.
Yes, sir.
And see, uh, with the stamp duty value, you don't check like this in adequate consideration and all. That is for the purpose of section 80C. You check, and you want to say the husband has received 92 lakhs. Now
Yes.
this capital gain income you are saying the capital gain will be taxable in the hands of husband only. Capital, see, who is the seller? Seller is the
Seller is
husband.
a husband.
So capital gain will be hands of seller only,
Yes, sir.
right? Now, even if wife paid inadequate, but inadequate word is not suiting here to be true. With the 50s, you don't compare like this to be true. This is not a practical scenario, I would say. But even if here, let's assume it, the capital gain income already, let's suppose wife paid inadequate consideration to husband. Ultimately, it is to be clubbed in the hands of husband. And anyways, the gain is taxable in the hands of husband. So both ways, it is taxable in the hands of husband only.
No, sir. Actually, if the property has started to earn in rent, otherwise any revenue in future days,
Fair enough.
then
So then in that scenario, ideally the income would be taxable in the hands of W only in this case. You don't compare it like this with the stamp duty value to be true. This will not be considered an inadequate consideration, okay? In this scenario. But yeah, if the price is substantially different, let's suppose wife, now the case would be like that. Wife paid, let's suppose 5 lakhs. Let's suppose wife has purchased from an independent person. Wife has paid 5 lakhs. The husband has paid the balance, it is 7 lakhs. Be clubbed in the hands of husband only. Clear?
Okay. Okay, sir. Sir, actually, I have one more doubt. Sir, if the salary is clubbed in the husband and due to, okay, wife he doesn't have a qualified certificate or something, but
Okay.
husband has 20% substantial insurance in a company, in that case, okay, whatever allowances, everything, it comes under wife, I need to be transfer and I need to find the taxable value in the husband and.
Okay. You mean to ask, let's suppose, okay, again I'll write this. Husband has a salary income.
Yes, sir, due to
Husband
clubbing.
will, I'll just take one simple example. I think your query should be solved. He will get a standard deduction of 75K.
Yes, sir. Yes.
Wife also has a salary income which is getting clubbed in the hands of husband. But this standard deduction will be one time. This
Yes,
will
sir.
not be doubled because this is under the head. Under the head, one time is allowed. Salary income is being clubbed. It's fine, right? But here it will not be doubled. It will be only one time. So depending on the credit you are claiming, let's suppose wife was claiming HRA, the husband was not claiming, they can get HRA, right? So depends on the benefit you are claiming. Accordingly, you decide it.
Sir, in case the wife is not okay, actually the salary is not charging in the hand of wife, then HRA something, how is possible to transfer wife and calculating the wife and their head? If the
See,
salary is transferring to husband hand, then we need to be also consider whatever HRA something other allowances given by the company. We need to tax it under the in the hand of the husband only.
it will be taxable in the hands of husband only, plus the benefit whichever are eligible, which are eligible benefits, they can claim those benefits. Okay, tell me one thing. Income of minor is getting clubbed. The minor has the saving
Yes,
bank
sir.
interest. Will you claim the 80 deduction?
No, sir.
Right? So for HRA, maybe I'm giving you the normally. I don't think maybe for HRA or specifically, I don't think it. I need to check quickly to be true. To be true, I'll check it. Okay, I'll check it. Maybe in the next session we have on Wednesday, I'll clarify. Okay, wife in
Okay,
case of
sir.
clubbing, whether the wife HRA benefits will be allowed or not.
Sir, because in case follow to the as a Wi-Fi, okay, I will get some confusion. Means again the standard something deduction 16 IA going to apply.
I think it will not be allowed, but I just want to I want to cross check it. Yeah, I think it will not be allowed, but I want to cross check it. Okay, I'll cross check it and will let you know. You can ask me it again in the next session. I'll surely clarify it. Okay.
Okay, sir. Thank you.
Okay. Uh, so no, tier one and tier two, there was a question as well. See, pension for the tier one is considered. Okay, pension for the it is the chapter number 6. Uh, okay. Okay, it was tier one was written like this. Okay, got it. See, for the central government employees, if the contribution is made to the tier one and tier two account, it's fine. For the private sector employees, the contribution should be made only to the tier one account. Tier two deduction, tier two account is the additional account under NPS contribution to which will qualify for deduction only in the hands of, only in case of central government employee. So the rule is 80 CCD if it is a other than CG employee, other than central government employee. If the contribution is made to NPS tier 1 account, then it is eligible. If it is a central government employee, then if it is made to the tier 1 or tier 2, both are eligible for the 80 CCD deduction. Got it? That is the concept. There was one question I remember, I don't have it handy, but in which there was a private company employee who contributed to both, so the tier 2 was not eligible for 80 CCD. Any other question? Yeah, Aditya, go on.
Good evening, sir.
Yeah, I can hear you.
Yes, sir. In examination, shall I start with working note? Then I start a table, sir. Working note like house property, salary, capital gains, PGBP, and other sources. Like work, write in working note. Then I start table, sir.
Okay. Aditya, if you ask me, to be true, you can start in any manner. Okay. First of all, you can start in any manner. There is no hard and fast rule. But if you will prepare the first, see, let's suppose it depends on two types of notes. Let's suppose you're making small, small tables. Income under the head house property, you're making a table. Then you are making a table for the income under the head PGBP. Then you are for other sources. I will say that will consume more time. What I'll say is, let me show you. Let's suppose you make out a table for the income under the head house property. Then you make for income under the head income under the head PGBP. Then you make for capital gains. Then you ultimately, once all is this is done, then you will make another table. You will write here income under the head house property total. Then next head you will write total, and then you will calculate the total income. This way you will double your efforts. In the sense, you will write here income under the head house property. Here also you will write it again. So this way you need to write more. Getting it? This will consume on
Yes,
your
sir.
time. So what you can do
Yes,
is,
sir.
you just quickly make out a one table. So you just write it here. Make out an inner column and the outer column. Two columns you can make because that will help you to present better. You write here income under the head house property. Whatever one, two, three items you have to do it here only. Do it here only. You write the amounts here. And don't make it messy. Don't make it messy. Let's suppose you know this table will go on to 2 pages. You leave 2 pages. Let's suppose if you know that this table will go on 2 pages. You leave 2 pages, then you write notes. Let's suppose this was rent receivable. Income under the head rental is there. This was, you need to take the higher of the two, lower of the two, then the higher of the two. You need to write a note here. You just take the final rental amount here. You write the gross GAV here. You bracket, in the bracket you write here note number 1. In the bracket you write here note number 1. This way your answer is complete as well, and it is not messy as well. Now at the end of this table, you leave some extra space and then you write here notes. You write here notes. You start here note number 1, right?
Yes, sir.
Examiner will surely look at your notes. If you will write all the notes here, this table will go on number of pages and this will look messy as well. So this way you can write note number 1 here, you write note number 1 here. Second, you write note number 2 here, you write explain note number 2 here. So this way you don't have to wait as well. Once you, at one time you are doing one adjustment, it is done. Because if you don't have so much time in the exam that you can come on adjustment 2 times. One time you are done with it, you are done with the note as well. If you will not write the note simultaneously, if you will not write the note simultaneously, then you will need to commit again and probably you may miss on some notes. We need to keep the note minimum. Kuldeep, who said this? Maybe we need to keep the notes minimum. Anyone said this? Anyone has guided you like that? Something like that? There is nothing like you need to keep the note minimum. I will say write as many notes as you can. Because once when you write the notes, you write the section numbers and all, the examiner gets impressed and they give you better marks, right? There is a, because
Yes,
see,
sir.
if you will write the note, it means you know the provisions. And okay, when you will see the marking scheme of the institute as well, there are stepwise marking. Plus, if you will not write the note and just give the final treatment in the computation, that will not be accepted. You will get half mark for it. You will just get the marks for the calculation. When you will write the note, then you will get the full marks. So that is how it is.
Yes, sir. Yes, sir.
See, I've seen students doing like this. They know the complete answer, their total answer is correct, but they haven't written any notes. The question was of 6 marks, they get only 3 marks because they haven't written the notes. See, again, this way, if you make a habit, you will not lose the focus. Always do give some mock test so that you practice it accordingly in an exam environment. Because I also used to write it like this simultaneously. I used to write the notes, and in my exam, I'll say when I used to clear, I'm not too old, like I cleared in 2019. So when I cleared the CA, every time I used to write the notes, and all my exams were 100% attempted. There was not even a single question that I left. So all the
Yes, sir.
exams were 100% attempted. In fact, I secured all India ranks in intermediate and finals both. So, so it was all question you that you need. If you will attempt 80 only, then how can you expect to get a exemption directly? Maybe some wrong question or something you will lose on, right? You need to attempt for a complete 100.
Sir.
Got it? Aditya, you got
Good,
the
sir.
presentation?
Sir, one more question, sir.
Yeah.
Sir, in NPS, they give NPS, sir. If NPS type 1, type 2, we can write in NPS, sir. But OPS give, what can we do? OPS give in examination, sir. OPS.
I couldn't get you specifically.
Sir, NPS is the new scheme, sir. New scheme salary. But in salary, if they give OPS,
What they give,
OPS,
sorry? Office.
OPS, sir.
Can you write your query? Maybe I'm not able to get you specific. OP. Okay. Fair enough. Okay. You're
Old,
saying okay, fair enough. You're saying OPS,
yes, sir, yes, sir. OPS, old pension scheme.
old pension scheme. I don't think for old pension scheme, uh, I don't think there is any deduction for OPS. Am I wrong? Can you I think that is for the new pension scheme only. Old pension scheme, there is nothing allowed. I'm just quickly checking it. I don't think there is specific deduction for the OPS, right? No specific deduction for the old pension scheme. You will get for the new pension scheme only, right?
NPS, sir. NPS deduction can get.
Yeah, for OPS you will not get the deduction. You will get it for NPS. Okay.
In
More
examination, OPS not given, sir.
no OPS will not be given, or if it is given, the deduction will not be allowed.
Yes, sir. Yes, sir.
Okay.
Yes, sir. Sir, how much we can take for NPS, sir?
That is already given in here, right? ATCCD. You that those limits are
20,000,
there.
I think.
10% of the 10%, 12%, 14% in the new scheme, right? And
Yes, sir.
then if you are self-employed, then also you can contribute. Then additional 50K employer
Yes,
contribution is allowed. Even the employer
yes, sir.
contribution is allowed in case of the new scheme as well.
Yes, sir. Yes, sir.
Okay.
Okay, sir. Okay, sir. Yes, sir.
Okay. Kuldeep,
Thank you, sir.
see, Kuldeep, that depends on your preparation, how many mocks you attended. That depends on your preparation. I'll say at least 2 mocks you should give. And that depends on how much practice you have during the practice exams, right? Maybe when you practice, you can try solving some of the question in the complete mode, right? So that you know that you are writing all the notes and everything. You can opt for something like test series or something like that. You can start it, okay? Fair enough. Anything else before we wrap it up for the day? Next session, we'll do questions on the return filing. We'll do on that deductions again. Some of the questions we'll do a mix, right? And there is one more chapter we'll do is I just forgot the name. TDS, right? I hope you have enjoyed the session. Visual, which point you want me to explain in Hindi? 1 and 2. point. Which 1 and 2 point visual? Can you please unmute and quickly tell me? Okay. Slide before. You can also unmute and quickly speak. Right. I'm not getting you which exactly thing you want. I can explain you, but you need to tell me. Visual, I have asked you to unmute, quickly accept it, and you can ask. No, I'm not able to unmute you. You can type your query again, Visual. I'll surely take it up. Anyone else, if you have any query, you can let me know. I hope you have enjoyed the session. I hope this will add up your learning. The last slide. Visual, it's very difficult to understand like this. Which is the last slide you want to refer? This is the what you mean? This is the last question we did. What is the in 4A? Okay, in 4A, what is the query? 1 and 2 point. Which 1 and 2 point? This short-term capital gain and let out. Okay, short-term capital gain. So visual. Okay, I'm uh, normally I have a habit of speaking in English. No problem. I'll speak it. Short-term capital gain 1,50,000, right? Short-term capital gain. Okay. शॉर्ट टर्म कैपिटल गेन आपका नॉर्मल रेट से टैक्स होता है 1,50,000 आपका अमाउंट है राइट देन लॉस फ्रॉम हाउस प्रॉपर्टी एक हाउस प्रॉपर्टी जो आपने रेंटल पर दिया है देयर इज अ लेट आउट प्रॉपर्टी देयर इज अ लॉस राइट आपका 2.5 लाख रुपए का लॉस है हाउस प्रॉपर्टी से आपका अगर 2.5 लाख रुपए का लॉस है आप ओल्ड स्कीम फॉलो कर रहे हैं यहाँ पे राइट यू हैव ऑप्टेड आउट ऑफ द डिफॉल्ट रिजीम इट मींस आप ओल्ड स्कीम फॉलो कर रहे हैं अगर आप ओल्ड स्कीम फॉलो कर रहे हैं और अगर आपका हाउस प्रॉपर्टी में लॉस है तो आपका हाउस प्रॉपर्टी से तो कोई और इनकम है नहीं तो आप बाकी हेड से जाएंगे आपका इंटर हेड नहीं और आप इंटर हेड सेट ऑफ करेंगे तो अगर इंटर हेड सेट ऑफ का अगर आप करेंगे तो आप 2 लाख रुपए तक ही कर सकते हैं आप 2 लाख से ऊपर नहीं सेट ऑफ कर सकते और आप फिर कैरी फॉरवर्ड कर सकते हैं अप टू 2 lakhs राइट तो इसीलिए ये 2.5 लाख में से 2 लाख रुपए हमने सेट ऑफ कर दिया है और बैलेंस जो 50,000 का अमाउंट है वो हमने कैरी फॉरवर्ड कर लिया है राइट आई होप इट्स क्लियर विजुअल fair enough any other doubt anyone else for practice of question visual you have a lot of things from the BOS right in your book as well after every chapter there are a lot of questions you have case scenarios as well from the BOS right you have model test papers as well from the BOS you have mock test you have RTPs you have suggested answer you have past exam questions a lot of things are there from the BOS right you have a lot of things to practice visual if you're asking me how many marks direct question come there is no specific weightage income tax will charge for income tax will be for 50 marks right 50 GST income tax that's it case scenario booklet can we get in Aditya I don't know about CDS portal if you can get that or not anyways it is on the website you can take you can I think you can check with the CDS team or the BS team they will let you know or okay visual says it is the sorry yeah and if you don't want, I think you can get it if you don't want if you can't get it you can get it printed right very easy homework visual revise the next step deductions as well TDS as well return filing as well these are revision classes right revise all of this come prepared we will have a lot of questions to practice in the next session before the next session I think by the Wednesday morning the file will be uploaded do practice out those questions as well it will give you the it will boost your confidence and to check whether it is correct or not I'll share the questions with the team for the Wednesday class by the Wednesday morning you will get it please do practice it before coming to the evening class okay Okay, then. Thank you very much, everyone. I hope you enjoyed the session. Thank you very much. Wish you all the best. Do prepare for exams and pass with the flying colors. Never ever practice for the 40 marks, 50 marks. Always practice. Always, always prepare for the real life scenarios. When you will become, say, you need to deal with all these things, right? Never study from an exam perspective. Exam will surely be cleared, right? And always attend 100% of the questions in the exam. If you will not attend 100%, then it is not right? Clear? Okay, meet you on Wednesday. If you will have still have any questions or any guidance in it, you can also ask me on Wednesday. Thank you very much. Meet you on Wednesday. Thank you. Yeah, Manish, we can end the session. Thank you very much.